Do you know a scientist who left the lab to make the stock market his new field of research and is now teaching day trading to millions of traders? Dr. Andrew Aziz is a quant PhD, an algorithmic trader, and a famous best-selling author. He has created a global trading community called Bear Bull Traders, where professionals and beginners learn together. Day trading for a living is not just a book, it's a boot camp for trading. If you also want your screen to become a system for earning instead of just showing charts, then this book is for you. Chapter 1. If you don't take a trade in the market today, nothing will change. But if you trade incorrectly, a lot can be lost. This thought echoes in the mind of the person who sits in front of the screen every morning, looking at the charts and waiting for a perfect entry. Not for making quick money, but for understanding oneself. While trading sounds like a skill or a profession, at a deeper level, it's like a mirror. It shows you what you are. If you have fear, it will come to the forefront. If you have greed, it will scream. If you have patience, it will yield results. And this is the beginning of this journey, where we will see trading as a purely psychological process, not a money-making machine. According to the author, it is very important to know yourself before you start trading. Because in day trading, the one who wins is not the one who knows the most, but the one who can control himself the most. When the author first started trading, he came with full preparation, a laptop, software, a brokerage account, and high-speed internet. But within a few months, he realized that mentality is more important than hardware and tools. Because trading is not a game, it is a daily mental battle. Chapter 2. The Psychology of Professional Trading. In this chapter, the author explains that two things are most important to become a successful day trader: structure and recognition of patterns. Every day in trading, you will see some specific patterns: gap up, gap down, consolidation, breakout, failure breakout. But until you learn to recognize these patterns, you will just be guessing. The author teaches us that recognizing patterns is not magic. It's a mental habit that comes only through repetition. By looking at the same chart again and again every day and asking yourself again and again, why did this move happen? Was there volume support here? Was it a fake out or a trap? This process slowly teaches you the language of the market. When it comes to trading strategies, the author emphasizes two main strategies: opening range breakout, or ORB, and reversal trading. ORB is a powerful strategy where you set a range as soon as the market opens and take a trade if that range breaks. But the most important part of this strategy is confirmation, because many times it happens that the market shows you a breakout has happened, but it's actually a trap. If you react without waiting or confirming, you can get stuck on the wrong side. This is why the author says wait and only make a decision after confirming. When it comes to reversal trading, it's an art that only a calm and patient trader can practice. When everyone is running in one direction and you are thinking in the other, it means you think everyone is wrong. And for this, you need self-confidence, experience, and deep preparation. This chapter also discusses a very important mental process: FOMO, fear of missing out. It's an enemy of a trader that follows him every day. When a stock is running up and you are not in it, a restlessness works inside you. Am I left behind? And from there, the process of making a bad decision begins. The author says that the best way to fight FOMO is to trust the process. If you have created your strategy and watch list and that stock is not there, then leave it. Don't try to catch the trend. Because professional traders only risk in a trade as much as they can mentally bear. So it is very important to determine your maximum loss amount so that your mental peace is not disturbed. In this chapter, the author also says one more important thing. Your worst trade is not the one where you lost money. Rather, it is the one where you broke the rules. Because even if you succeed in that trade by breaking the rules, you will get used to a bad habit, and this habit will slowly destroy your capital. A very deep aspect of trading strategy is to create a plan and stick to it, but it is only possible when your emotions are calm. The author says to scan your emotions for 10 minutes before trading. Are you angry today?
Is there any tension at home? Does the loss from the previous day still linger in your mind? If the answer is yes, then don't trade, because trading requires a clear mind. Just watching is also a part of trading, and this is the basic foundation of the trading mindset. See, think, understand, and then decide. Chapter 3: Preparation and Planning. Every profession has its own language and tools, but the most dangerous aspect of trading is that everyone considers it easy. Open a chart, see a candle, press a button, and make money. But those who have gone through this process for years know that trading is as deep as meditation. In this chapter, the author teaches us what the first real tool of trading is. It is not technical analysis or an indicator, but preparation. Because in trading, planning means you are creating a structure amidst uncertainty. Trading without preparation in the world of professional trading is like sailing a ship in a storm without a map. The author tells us about pre-market preparation, which means there should be a process for how to start the day. The first thing that comes in this is the gap scanner, which means the stocks that are gapping up or down even before the market opens. These stocks show the most volume and movement at the beginning of the day. But only a gap is not enough. The author says that you have to see the volume, what news is causing the move, whether the stock is liquid, active for trading, whether its ATR, average true range, is worthy of trading. Here, a mindset is very important. Not every movement is worth trading. You have to learn to be discriminating. This does not mean that you have to trade every gap-up stock, but only those where your setup fits. Now comes the daily watch list. The author keeps 2 to 5 stocks on his watch list every day, not 20, 25, because focus is the biggest weapon in trading. If you look at every stock, you will not understand anyone. But if you understand only 3 stocks well, then every signal of theirs will be clear to you. Another unrevealed truth of trading is not every day is worth trading. There are some days when the market is sideways or there is no clarity in the movement, and in such a situation, the wisest decision is to do nothing. The author says that he has spent many days where he just watched the market and did not take a single trade, and those days proved to be the most profitable for him because he saved himself from loss. Now let's come to a very important concept: trading in the zone, or the zone flow state. When you are mentally calm, when your thoughts are clear, and you are completely connected to the screen, the decisions you make are the most correct. But this zone does not come suddenly. It requires good sleep, a regular routine, a distraction-free environment, and most importantly, the analysis of the trading journal. The author says that keeping a trading journal is not an option, it is a necessity. Don't just record the daily trades, but also write this. How did you feel at that time? Did you enter in a hurry? Was your mind calm or restless? Slowly, you will create your own psychological profile, which will tell you when you make the most mistakes and when you perform best. Along with this, the author also talks about the importance of hotkeys, and these small tools quickly reduce your reaction time so that you can make the right decision at that moment when the movement can reverse. But remember one thing, hotkeys can help you make quick decisions, but the right decision will only happen when your mind is clear. Many times traders press the wrong button only because they panic. So the author says, more than hardware, innerware is more important in trading. Your mind, your emotions, your speed. These are the real tools. A very important rule also comes to the fore in this chapter. Avoid trading in the first 5 minutes, because the first 5 to 10 minutes after the opening bell are the most volatile. Emotions are at their highest there. Fear, excitement, restlessness, all at once. If you are not stable at that time, then your first trade can spoil your day. The last part of the chapter gives us a warning. Avoid noise. That is, don't follow someone else's trade. Stay away from Twitter and Discord groups and just follow your own plan. Because when you trade on someone else's belief, you don't have your own belief in it. And when the trade goes wrong without belief, you can't forgive yourself. And this is the lesson of a true professional trader.
If I win, it's because of me. If I lose, it's also because of me. Chapter 4. Emotions and Risk Management. The moment you think the market will go up today or this stock will fall today, you bind the market in the frame of your expectations, and from there, defeat begins. Because the market doesn't care what you think. The market only does what it has to do. In this chapter, the author introduces the psychology that either makes a trader a professional or leads to his destruction. And it starts with a simple question. Can you really recognize your emotions? In trading, we are surrounded by 4 main emotions. 1. Fear. 2. Greed. 3. Regret. 4. Excitement. These 4 together put you on a roller coaster where only one thing can put the brakes on: self-awareness. The author says that the real form of fear comes when you get stuck in a trade. The candles are going down, your hands are shaking, and you are thinking, let's wait a little longer, maybe it will go up. But this is hope trading, and hope is the most dangerous thing in trading. Similarly, greed takes you to a place where you want to earn more than your predetermined profit target. You think, let me hold on for a little longer, but the market suddenly reverses, and what you had earned is also gone. Then comes regret. After coming out of regret, when you move to the next trade, either you do revenge trading or you become completely scared. Both paths take you away from your system.
And if you ever make 1 or 2 good trades, then an excitement comes, overconfidence. Now I have understood the market, and this thought is the beginning of the next loss. So the author says, it is normal for emotions to come, but it is optional to blindly chase them. Now let's talk about risk management, which the author calls the backbone of trading. No matter how perfect a trade seems, if the risk is not determined in it, then it is not a trade. It is gambling. The author has a wonderful rule. Only risk as much as you can lose while maintaining mental peace. That is, invest an amount that even if you lose, your mental state will not be bad. Many times in trading, it happens that people take good trades, but due to lack of proper risk management, their mind becomes restless. So the author says that 3 things should be determined before every trade. 1. Entry point. 2. Stop loss. 3. Profit target. And the ratio between these 3, that is, the risk-reward ratio, should be at least 1:2. That is, if you are risking 1,000 rupees, then there should be a possibility of earning at least 2,000 rupees. Here the author says one more deep thing. If you cannot write the reason for a trade in one line, then that trade should not be taken. Another powerful concept associated with this is the loss acceptance mindset. You have to accept beforehand that this trade can also be wrong. And if it happens, then do not have any regret or anger. Just do an analysis and move on. In this chapter, the author recommends a habit. Before every trade, ask yourself 3 questions. 1. Does this trade fit within my system? 2. Am I ready to lose this money? 3. If this trade goes wrong, will I remain calm? If the answer to all 3 is yes, then only take the trade, otherwise not. The author also says that professional traders consider a no trade as a decision, because sometimes doing nothing saves the most money. And in trading, saving money is much more important than earning money, because trading is not a race, it is a process where survival is the first step to success. At the end of the chapter comes a very deep saying. The goal is not to win every trade. The goal is to stick to the plan. The victory in trading is not what happens in one day. The real victory is what lasts for years. And for that, you need alertness, control, and small mental victories every day. Chapter 5. System and Lifestyle. Many people think that the most important things for a successful trader are quick thinking, knowledge of technical charts, or financial power. But the truth is, the most crucial thing in trading is your mental stability. And this stability comes from a consistent routine.
In this chapter, the author teaches how to mentally prepare yourself before trading, waking up early, doing light exercise or walking, meditating, and then analyzing market news and pre-market movements. All these are part of the preparation, and they're done so your mind isn't agitated when the market opens. Instead, it's ready and calm. Trading isn't a profession, it's a lifestyle. The most important part of this chapter is playbook creation. This means you should have your own trading strategies that you have tested repeatedly. The author says he has worked on only a few specific setups for years, such as opening range breakouts, reversal patterns, and VWAP pullbacks. There is a logic and psychology behind each setup, and when you use it repeatedly, it becomes a reflex in your mind. Trading isn't a random activity, it's a programmed behavior where every step is predetermined, with only slight adjustments based on the situation. Now, let's talk about environment design. Your physical and digital environment determines how long you can remain calm. The author teaches that you need a trading setup with no distractions, no TV, no noise, no unnecessary apps. The screen should only show charts, and you should have a notebook, a timer, and a clear mind. Because when the environment is well organized, a mind becomes calm on its own. To avoid making emotional decisions, the author has created a habit, the hard stop-loss ritual. This means setting a stop-loss on your brokerage platform before every trade, so there is no room for emotional decisions. He has also created a time stop. This means exiting a trade if it doesn't move within a few minutes, regardless of profit or loss. Why? Because a stock that doesn't move in a timely manner can later turn into a trap. Here the author gives us a surprising fact. My best trades gave me a profit instantly. The ones that lingered usually went the other way. In other words, the trades that are correct don't give you time to think for long. With this comes a crucial mindset. Every trade is independent. Think of each trade as a new chapter. Regardless of profit or loss in the previous trade, the new trade is a new decision that should be based solely on its own logic and signals. Many new traders make the mistake of revenge trading, trading to recover previous losses, or euphoric trading, trading based on the high from a previous profit. The author says both are dangerous traps, and there is only one way to escape them, a routine that includes breaks, review, and mental refreshment. Another part of the chapter is the post-trade process. This means asking yourself a few questions after every trade. Did I follow the plan? Did I react emotionally? Can I do this again? This review makes you a little better every day, and this is how a true professional trader is made. At the end of the chapter, the author gives us a profound lesson. The difference between an amateur and a professional is not in their knowledge, but in how religiously they follow their process.
Chapter 6: Trading Plan and Performance Analysis. So far, you have understood the part of the trading world that is written in books and principles. But now it's time to step into the phase where a true trader is tested. A strong trading plan and continuous analysis of your performance. This is the part that transforms an amateur trader into a professional. Andrew Aziz starts this chapter with a profound lesson. Emotions make us human, but rules make us traders. In other words, we have emotions because we are human, but to be a good trader, we have to rein in those emotions with rules. Andrew says that recognizing a trend or a setup is not enough. The real battle begins when you see the trigger, and the internal struggle of fear, greed, hope, and restlessness determines whether you will be a winner or a loser. So let's first talk about a trading plan. A trading plan is not just about entry and exit rules. It is a complete strategy created by keeping your psychological, financial, and technical situation in mind. A good trading plan is divided into these 7 parts. Pre-market preparation. What is your preparation before the market opens every day? Which stocks do you keep on your watch list? What news and gaps do you pay attention to? Trade selection criteria. On what basis do you consider a stock to be trending? Is it high volume? Is there a gap? Or is it moving due to some news? Entry rules. When should you enter? Do you enter only on breakouts or also on reversals? Position sizing. How much capital will you invest in a trade, and by what logic will it be determined? A fixed amount? a percentage of capital, or based on risk? Risk management. How much loss can you tolerate in each trade? Do you use a stop loss? If so, how is it determined? Technical levels, ATR, or specific points? Exit rules. When will you exit? When the target is met or when the price goes below a certain indicator? Post-trade journaling. What did you learn? Where did you make a mistake? And how will you not do it again? Andrew emphasizes that this plan should be written down and not just written, but followed daily. If you trade even for one day without a plan, you are not trading, you are gambling. Now let's talk about performance analysis, which according to Andrew is a professional trader's biggest strength. Every trade, whether it's a profit or a loss, teaches you something, but you can't learn until you analyze it. Andrew suggests creating a trading journal. In it, you have to fill in these details for every trade. Which stock was it? At what price did you enter and exit? What were your stop loss and target? Why did you enter? What was the setup? Did you follow your plan? What emotions did you have during the trade? And most importantly, did you make any mistakes? This information will show you within a few days which mistake you are making repeatedly. And in trading, the real victory is understanding what to avoid. Andrew shares the story of one of his trading partners who regularly filled out a trading journal for a month. Initially, he was losing every day, but in the third week, he realized that he was repeatedly revenge trading. That is, after a loss, he would impulsively jump into the next trade to recover the previous loss. When he only changed this one habit, his losses started to decrease and he was profitable the next month.
Andrew says trading is not about being right, it's about being disciplined. In other words, it's not necessary to be right every time, but it is necessary to be disciplined every time. Filling out a trading journal is like a mirror that shows you the face you want to run away from, but that same mirror also corrects you. And here comes Andrew's most interesting part, the identification of A-plus setups. Not all trades are equal. Some trades fully follow all your rules. In them, the setup is also clear, the volume is good, the news is supportive, and your mindset is also completely calm. He calls such trades A-plus setups. Andrew advises focusing on these A-plus setups because these are the opportunities that determine your total profit at the end of the month. That is, your goal should not be to make 10 trades every day, but to make only those trades that are the strongest setups for you, those A-plus trades. Finally, Andrew says something very profound. Don't trade for excitement. Trade for income. It's good to find trading fun, but if you are trading for thrill or excitement, then you are not trading. You are living life on an adrenaline rush. For a professional trader, every trade is like a mission where every step is taken thoughtfully. Chapter 7. The Mind of a Master Trader. Have you ever wondered why some traders consistently make profits while others repeatedly make the same mistakes? It's the mindset that keeps them calm in difficult situations, forces them to learn from failure, and creates a hunger to get a little better every time. The first thing successful traders have is self-awareness, the power to recognize their own thoughts, emotions, and decisions. When an experienced trader sees that their mind is falling prey to greed or thinking of exiting out of fear, they identify it and stop. They are not slaves to their emotions. Rather, they know how to control them. In addition to this, these people also give great importance to their routine. They work with the system every day. Chart analysis in the morning, review of previous trades, mental preparation, and working on their weaknesses. They have turned every small step into a habit. Stenberger says that the biggest change comes when we change our thought patterns. The trader who repeatedly thinks that they will fail, their brain puts them in similar situations. On the other hand, the one who thinks that every trade is an opportunity to learn slowly makes themselves better. The author has also said another important thing. Peak performance states, that mental state where we do our best work. This state does not come on its own. It is created from meditation, preparation, and focus. Just as a player prepares themselves before going on to the field, a good trader brings themselves into a state of mental peace and clarity. Here, visualization techniques also prove to be very effective. The author has said that many successful traders visualize before every trade, how they will take that trade, how they will manage risk, and if it fails, how they will react. This visualization makes our mind practice in advance, so the mind is not afraid during actual trading. But nothing happens with just imagination. Habits are created only when they are repeated consistently. So the author advises that traders should keep a performance journal in which the trades of the day, the emotions that came with them, the things learned, and the goals for tomorrow are written. When you see yourself in writing every day, you know where you are making mistakes and where you need to improve. This self-feedback system takes you from ordinary to great.
Finally, the author says a very correct thing. You become what you do every day. So if you make discipline, review, and learning your habit every day, then success cannot stop you. The biggest victory in trading is not against others, but against your old self. If you make yourself a little better every day, your place in the market is secured. Chapter 8. Finding A-plus setups. Have you ever wondered how to identify a perfect trading setup? Is there a rule book that will guarantee a profit every time? No, but yes. There are certain special signals that can help you recognize an A-plus grade setup. In this chapter, Andrew Aziz shows us a window into the mind of professional traders, one that opens every day but goes unnoticed by many. So let's start this chapter, which is titled, How to Find Stocks to Trade and Recognize the A-plus Setups. Andrew talks about his daily morning routine. He wakes up at 4 a.m., scans the news and the market, then he creates his gappers list, which is a list of stocks that have moved significantly up or down in the pre-market. These are the most active and volatile stocks of the day, perfect for day traders. Now let's talk about the gap strategy. Suppose a stock closed at $100 yesterday and opens at $110 this morning. That's a 10% gap up. Why? Maybe due to an earnings report, breaking news, or a large fund's investment. This gap is the door that day traders use to enter. But not every gap is good. You have to understand whether the gap is due to a real change or just noise. Andrew mentions an important tool here, float, which is the total number of shares of a company that are available to the public for trading. If a stock has a low float, its movement can be very fast, meaning high risk, high reward. On the other hand, high float stocks are stable, with fewer spikes but controlled movements. Now, let's get to the setup. According to Andrew, an A-plus setup requires a few things. Clear trend, the stock is either going up or down, no sideways noise. Volume spike, when a real move occurs, the volume suddenly increases. News catalyst, such as earnings, upgrades, downgrades, FDA approvals, or lawsuits. Level 2 clarity. The depth seen on the bid and ask screen will tell you how much conviction there is in the market. Andrew says that often a stock gaps up but then quickly starts to fall. In such situations, new traders get confused. But if you have a pre-planned rule, if this level breaks, I will enter, if it doesn't, I will stay out, your decision-making will be much better.
He says that his trading setups have specific names, such as the bull flag, ABCD pattern, and VWAP reversal. And these are not just fancy names, but tested and recurring patterns. Let's understand with an example, the ABCD pattern. A sharp rise, B, a pullback, C, consolidation, D, a breakout. The most important things in this pattern are the increase in volume and trading above the VWAP. When these two things align, that's an A-plus setup. Andrew says that the more time you spend on pre-market analysis, the more clarity you'll have in your decisions. A disciplined trader doesn't trade just for excitement. He only chooses high-probability trades every time. Another great thing Andrew says in this chapter is don't marry your stocks. A stock that is doing well today might not do so tomorrow. You have to be flexible and detached. At the end of the chapter, Andrew talks about the importance of his trading journal. At the end of each day, he writes about which stocks he watched, what he thought, what he did, what mistakes he made, and what he can do better next time. This journaling makes him sharper. We get a big lesson from this chapter. Every trade is a story, but the truth of every story is only seen when you understand its pattern, volume, and momentum. High-quality trades are rare, but they are the ones that change the game. Chapter 9. The Professional Trader's Mindset. Trading is not just a skill, it's a mental game. And to win this game, you have to bring your mindset to a level where every decision is made thoughtfully, without fear or greed. In this chapter, author Andrew Aziz discusses the habits and mindset that helped him become a professional and consistently profitable trader. The first and most important thing to become a successful trader is discipline. No matter how good a trade seems, if it doesn't fit into your trading plan, you should let it go. There are many opportunities in the market every day, but a good trader chooses only a few that align with his strategy. Andrew says, "I have made the most money by not taking those trades that could have tempted me." Another important mindset is to put your ego aside. Many times, traders are not willing to accept that their trade might be wrong. They stay in a trade, even when they are continuously losing, hoping that the market will turn in their favor again. But such thinking only increases losses. Andrew himself admits that he made such mistakes many times in his early days. But slowly he learned that the biggest victory in trading is to quickly accept your loss and exit.
Besides that, it's also important to develop the habit of recovery. Everyone suffers a loss at some point. The only difference is that a successful trader learns from that loss and gets back up, and that too without a feeling of revenge. The thought that I will now get this money back at any cost is very dangerous and causes bigger losses. According to Andrew, successful traders ask themselves these questions after every trade. Was this trade according to my system? Did I follow the entry and exit rules? Was I able to control my emotions? These questions keep them honest with themselves and lead to continuous improvement. Another characteristic of a good trader is a routine and a habit of self-reflection, preparing before trading every day, writing in their trading journal about what to look for, what levels to pay attention to, and reviewing at the end of the day what went according to plan, what went wrong, and how to fix it. The author says that he has created a trading journal where he records every trade, entry point, exit point, reason for the trade, mental state, and outcome. This has helped him a lot in catching his mistakes and improving his system. Every day when you sit in front of the computer, think about how lucky you are to have this opportunity. This feeling brings balance and stability, which is essential for a successful trader. Andrew's lesson tells us that successful trading doesn't come from staring at the screen or reacting to every moment, but from how to play it like a long-distance